Welcome back to the channel, everybody. I know that a lot of you are sitting on pins and needles wondering what's going to happen in the real estate market. And, I understand that. Now, this is my third downturn, so I've seen some of this. So I obviously have a little bit of an opinion, but I've got somebody that's even more well-versed in this. Barbara Friedberg, she's a CEO of Wealth Media and a longtime real estate investor. And she comes in and talks to us about, do we want to look at hard assets or should we be looking at syndications, real estate investment trusts? What should we have a focus on right now? So make sure you check out the video and give us a like while you're there. Now, if you're new to the channel, my name is Joe Killinger. I've been a real estate entrepreneur for over 20 years, and I use this channel to bring people like Barb on and really give you all the tips and tricks and some insight on what's going in the marketplace to help make you a better investor or a better real estate agent, whatever the case may be. So make sure you check out the video, and again, give us a like. And if you haven't done so, make sure you subscribe. Well, Barbara, I think it's a perfect day to have you on to talk about where you should be looking for real estate deals because, I think we can officially take FTX out of the marketplace to be looking at investing. So thank you for coming on today. I'm anxious to hear what you have to say. I think, let's briefly touch on FTX and, what your thoughts are on what happened.
Okay, well, FTX has gotten slammed. They are a big cryptocurrency broker, and I would put them in the speculative category. And FTX is an example of the type of company that if you choose to invest in a more speculative company, which means with an unproven technology or a newer company or a company that doesn't have a track record, don't put all your money there. Just put a small amount.
Yeah. There's a big difference. I've been preaching this for years, and too much, I think. I'm starting to sound like my father. It's amazing how that happens. The older I get, the smarter he gets, in my mind.
Don't we all?
Yeah. There's a difference between an investor and a speculator. And, a lot of people were speculating. And, you've got to decide what you're going to do or do a mixed bag because, an investor is looking for historical data. You can kind of have an educated guess on where things are going with that historical data. So speculation is just like you said, you're putting money in and hoping that it's going to go because there's just no data to really do any research on. But all right, let's get on to real estate. What do you think? Where should we be going? Where should we be finding some deals, Barbara?
Okay, well, let's talk investing a little. And I want to piggyback on your speculator comment because not only do you have to decide whether you're going to be an investor or a speculator, but you also need to know the difference. Investing in a stock because some guys on Reddit thought it was going to be a really good idea and they wanted to break the shorts, that's speculating, okay? Then doing your research, looking at the price earnings ratio, looking at the stability of the earnings growth, what the product is, what the company's growth potential is, that's investing. So you have to know the difference. You have to choose whether you're going to be an investor or a speculator, and you have to then educate yourself first. And what that means is investing isn't hopping on Robinhood or Webull or one of the cool apps that are so easy to get on and saying, hey, what's trending? I'll go with that. Because that is speculating. So keys to investing, educate yourself, diversify, know what you're investing in, and have a plan before you start deploying money. Investing is not for someone that wants to make a quick buck. Investing is for someone who is looking to build lifetime wealth. And you shouldn't get into it with the money that you're going to need for your groceries next week.
Oh, amen. You might know my dad, huh? You sound just like him. And he always said to me, you go treat it like a business. You've got to show up every day and look at it, know what's going on, know where your money's at and how it's working for you. On real estate, Barb, where would you be looking right now as a real estate investor?
As a real estate investor, I would be looking in the areas that, are you talking about like real estate investing as a security or as actual real property, because there's
I
a
think,
big difference, and you
yeah,
can, you can do both.
yeah. I think, you know what? It's a good point. Let's start off with as a real asset first.
Okay. As a real asset, you want to look at areas that are growing. So you want to, first of all, figure out, are you looking for single family? Are you looking for multifamily? Are you looking to get into a syndication with a reputable group? Okay. And look for bigger properties. First, you have to make that decision initially. And then we're in a unique period right now, because as interest rates have gone up, that's going to, at least in the short term, have some sort of negative impact on real estate investing, because the cost of money is much more expensive. So you want to look at areas that you can buy real estate that are growing and that you can afford. For example, you can't, if you're starting out, you really don't want to start as a real estate investor in some place like LA or San Jose or San Francisco, because you need so much capital, and those markets even now are very, very overvalued. So I had a friend, she went to Sacramento, which was a smaller market. She lived in California, but she lived in San Jose, but she could manage property in Sacramento. So you want to look at valuations. Does it have upward potential? Because you can find a great property, but if you're paying too much for it, it doesn't matter. You're not going to get the appreciation.
You know, we were in Dallas, Texas. We own a bunch of multifamily, and we had investors from out of state came into Dallas and just said, "Listen, we want to pay this." We didn't have them on the market. They just called us up and said, "We want to buy your multifamily assets." And our plan with those assets were to sit through the wave that we were going through. Everything was going crazy, and the area was turning. It was low income when we bought in, and it was slowly creeping up. High rents higher. It was pretty quickly, actually. So we're just going to kind of wait it out, scrape that property, redevelop, put in a new bunch of buildings, add about 30% more units. And this investment group came in and paid us almost exactly what the return we would have got if we'd have gone through all that brain damage and done all that work. And so we said, okay, well, you can have them. And, I see that they're back on the market, and they've been on the market now that's over a year ago. And so they took them so it's probably been on the market for 6 months. They're not going to get that return. They just didn't understand the market.
That is such a wonderful story. And it reminds me so much back, I think it was in the 90s. I was working as a portfolio manager for a real estate investment company. And part of my job was also to co-manage our real estate purchases. And so at that time, we had a lot of capital. And so we spent a lot of time in Cincinnati, Ohio, which is a really nice middle market, looking for undervalued properties that that the numbers worked, that we could get a good price, that the rents would support, because you can't buy a property and hope for appreciation. You have to buy a property and realize that the rents have got to support at least your mortgage. And you have to allow for the unexpected, such as things like vacancies, like repairs. You have to work so hard. And we spent nearly 2 years and we didn't buy a thing at that point, because we could not find a property where the numbers made sense. So sometimes you're not going to be able to find a viable property to buy that makes sense. On the other hand, I've read a lot about people investing in Detroit, because Detroit got slammed.
Yeah.
And Detroit's a great city. It's a major city, and it is coming back today. People could buy properties there for $20,000, $30,000, $40,000, put in $15,000, $20,000 to renovate, and later double their money. There's a lot of people that went to that area. So
it was. They brought a lot of tech companies in there.
Yeah. And Detroit is definitely coming back. So it always gets down to, you can find something to invest in any market, but you can't find something to invest in every market.
Yeah. Well, I think, and I'm sure you agree with me, the last, 11, 12 years, we've really got away from the fundamentals of investing because, I could buy a property, hold on to it for a year, turn around and sell it for more money. I could do a little bit of work around there, not even really worrying about that. I saw a lot of people, I should say, not even worry about their tenants. They just knew that in a year they were going to be out of it. They're not going to deal with the headache of a tenant. And I think that's something, we need to get back to the basics. And, you, especially now, you should be talking to your tenants. You should be making sure that they're happy, make sure they've got everything they need. Because one of your biggest costs as a landlord or investor is re-tenanting those properties.
That reminds me of something. My father actually started a very big real estate company in Ohio. And he said to me when he was screening tenants, of course we did the check where you went through and you checked your credit and all of that. And we checked that. My dad said to me, I'd like to go over to their house and look at how they lived. And of course, he never did that. Of course, I don't think that's kosher. Not
probably
quite,
not anymore.
not quite sure, but you have to look at who you're renting for, particularly depending on the market. If there are a lot of comparable rentals at the price that you're listing your rental for, they can leave.
Yeah.
And so you want to keep tenants in, you want to keep them happy. As we're talking, it just reminds me that real estate investing is not a game, it's a business.
It is.
And it's not something you hear a commercial on TV or you listen to a podcast and you're like, okay, I'm ready to go in. I love real estate investing, but it is a lot of work. You have to assess how much capital can you put in. And I think now we're going to experience a little bit of time where prices are going to drop. Yeah. So this is a good time to think about, okay, getting a mortgage is getting really, really expensive. But Joe, we've discussed before the idea of seller financing. And this is a great time when you're looking, you find a real estate market that you want to start investing in. And you want to look probably within an hour or two of your home. So initially, so you can go and visit that property and supervise whatever work needs to be done. Or if you can travel, that's great. You can do that too.
Sure.
But you want to think about, okay, how am I going to finance this? I don't want to pay 8% or 9% for a mortgage unless it's just for a very short bridge loan. I'm going to talk to the seller. If I can offer him or her, if I can get financing from him or her for say 5%, which is really nice for them because there's not much of an alternative to get 5% guaranteed, not guaranteed, but monthly income. They might do it for 6, 12, 18 months. You've got good financing. And then you can proceed with the renovation and the reselling, or the renovation and the finding the tenants, getting the property rented, and then securing financing later.
Yeah, I think it's going to be, that's something that you bring up, seller finance. I know we spoke about it last week, but it is, you're seeing it now. We spoke about it last week, and now I'm starting to, maybe it's just since it came to mind, I'm noticing that people are offering that seller financing available. And so it's a little sooner than I was expecting. What I'm waiting for is when they start offering the Rolexes, when you do a certain length of lease term, right? I'd like to get a Rolex someday. It's the only way I can afford one, I think.
Yeah. Let me know when you find that deal.
Yeah, exactly. Well, we used to. Actually, the building that we're in here in LA, we're in West LA. At one point, 2008, 2009, they were offering Rolexes for a certain term of lease, and on top of the commission. And we've already seen some commission bonuses offered to brokers. So now, Barb, would you be investing now in assets, or would you be looking more for real estate investment trusts, syndications? Where would you be looking for if you were a newer investor? That's
It depends. It depends on your time
yeah,
and your available capital. If you've
right.
got $2,000 to invest, that's not enough to get into real property investing. It really isn't. And no money down is not a strategy. I don't care what you hear on late night TV or online.
Yeah, you're not seeing that so many YouTube channels about that anymore. So you're
No.
not seeing those videos, BR videos, or Airbnb, how I made my millions at Airbnb. Those videos have slowed down.
Yeah. So I would say if you're a small investor, yeah, go with a real estate investment trust. There are hundreds of them out there. There are many ways to screen for them, and you can get real estate exposure that way.
Yeah.
Even syndications, you typically need at least $10,000. So start with a real estate trust and then use this time to build up your capital and to learn about real estate investing. Real estate investing is an awesome side gig when you're young and you've got more time than you have money. Once you build up $10, $15, $20,000, you can start looking at investing in real property in areas where there is more affordable real estate. I will also say, like everything else, real estate is cyclical. And what that means is there's times when real estate is highly valued, which means you're going to pay more for the same property. And there are times when it's very low, affordably or undervalued. For example, we had a big crisis in 2008, and the real estate market totally crashed. Okay. And that crash lasted for I would say roughly 5 to 8 years. That was the time to buy real estate. Actually, I bought my condo there and it has tripled in value, which is nice. My only regret is I didn't buy more.
Yeah. Hindsight's always
So
2020, isn't it?
what?
Hindsight's always 2020.
It is always 2020. And if there's one silver lining within the investing cloud, which is when assets drop in value due to external forces like inflation, like a systemic market crash, like a real estate crash, that can be bad if you need to sell and take your capital out. It can be an awesome opportunity if you are an investor in real estate and stocks and in bonds, because those are the best times to buy.
I agree. I think it's going to be a lot of opportunity. This is my third downturn. So, I think it's going to be a lot of opportunity here. I think there's going to be a lot of people that need to refi that are not going to be able to.
Yes.
And,
and that's where I hate to say it because I don't like to prey on others people's misery.
Yeah.
But when interest rates really go up and somebody has made the mistake of investing in a variable rate mortgage, whether it be for a multifamily property or an individual property, there are going to be increased defaults and foreclosures. And that is, and again, I'm uncomfortable saying that, but that's a reality. That's an opportunity for those people that have cash to swoop in and buy real estate.
Yep.
Right.
Yeah. Yep. That's exactly it. You'll see it coming. So yeah, I think real estate investment trusts, syndications, but again, you want to do just like on your property investments, do your due diligence on these companies before you go investing. Don't just say, okay, these guys are huge. This guy's been on CNBC a couple times. Let me go. And, he's got to be great. And for those people that invested in FTX, that kid, Sam, was on CNBC and every other channel until this week, so do your own due diligence, really check into it. Oh, I lost you, your volume. There you go.
And that means educate yourself.
Yeah.
Do some reading from non-biased sources.
Yep.
I happen to write for Investopedia, but I really like their coverage on everything investing. It's very well researched. It's very non-biased. Also, your investment brokerage company puts out a lot of content.
Yeah.
And it is very educational.
Yeah. And if you start investing in a real estate investment trust, you can go in with a smaller amount and they're going to send you all the documents and you can really learn real estate while you're earning some money.
And read them. I know they can
It's
be
boring.
boring. It can be so boring, but you really, take it a little bit at a time. Don't sit down in an hour and think you're going to go through a prospectus. But read it bit by bit, because that's how, over the long term, over decades, and I can attest to that, that's how over decades you build wealth, you build knowledge, you build education.
Yeah. Firm believer. When we sold that multifamily building in Dallas, Barb, I even told that investor, I said, I don't see how you're going to get these numbers, because he paid top of market. And, he just, well, I'm going to run it differently than you guys ran it. I'm like, okay. We were at 98% occupancy, and they were all long-term tenants. And, and he came in, he added an extra $1 million on top of it, redoing the units, and which probably could use, but our plan was to demo it in another year or two. And now he's got it back on the market. There's just no way. There's no way he's going to get anybody to come in and buy that, probably for what he even paid us. And so I tried to, again, I did not have it on the market. It was a good investment. I almost tried to talk him out of it, but at some point you're like, okay, as long as you know what you're doing, then I'm good. I'm not going to have any sleepless nights cashing your check and going and buying a few triple nets. And we did that. We bought a few triple net properties. And so yeah. Well, Barb, thank you very much for taking the time. We went way over what we were going to go, but I just think there's so much valuable information here that, I think you and I are both on the same page that there is going to be a lot of opportunity in investing in real estate, either in, investment trusts or syndications or the actual assets. But both of them come with some responsibility of due diligence.
Great. Thanks for having me on, Joe. And Joe will have some links to where you can find me. I'm at Barbara Friedberg Personal Finance, Robo-Advisor Pros. I'm all over the internet. I even have a YouTube channel.
All right. Well, we're going to make sure they find you. So if you haven't sent them to me, send them to me. I'm going to put them down below. And so everybody watching, thank you for watching today. I hope you learned a lot from Barb. She is just so much information to give you. Don't hesitate to reach out to her. Make sure you check out her channels. And if you haven't done so, make sure you subscribe to my channel and go subscribe to Barb's channel as well. So, all right, Barb, thank you.
It was a pleasure.